to the Trading Market Technicals Morning Call video for Wednesday, March the 6th. A nice move to the upside, breaking above the 1525 barrier. Markets grinded higher pretty much most of the day on good ISM services numbers. We were down about 6 handles in the pre-market. That quickly changed after the 10 o'clock number came out. NASDAQ up 40, dollar down slightly, gold down 4, S&P up 14, Dow up 125. We have had new highs in all of our sectors except our financials that we follow. Of the 5 that we follow, small caps and financials are lagging this advance. Money's still flowing into utilities, healthcare, and consumer discretionary. Copper is still a laggard. Red flag still around us, and we just have to be nimble in this trading environment. No question about it. What are we looking for? Well, I'm probably looking for one more push higher, and then a slight pullback, and then one more advanced after this little move finishes, and then that might be that tradable top that we're looking for. In the interim, what we want to do is we want to trade the best setups, and we want to be nimble on our trading setups because market continues to grind higher, and we have a gap up. There's very limited quality trades intraday when you're trading during the day. Now, obviously, if you're swing trading and you're comfortable holding longs in the overnight session and you're able to manage your risk properly, that's fine. Personally, I am just day trading right now, looking for quality setups, and that might only be 1 or 2 trades a day, 1 or 2 trades every other day, but I'm fine with that because I'm trying to reduce my risk with markets that are continue to grind and red flags around us until the market readjusts itself, realign itself, and then when I see the red flags have gone away, so to speak, then I'm looking to get a little bit more aggressive, but not until I see a decent pullback. The markets are so overly inflated based on what the Fed is doing and the central banks around the world. We could see it. It's all upon us, but personally, again, I manage my risk accordingly, and if I take a step back and do some quality trades, you're still going to get paid at the end of the month. And that's really what it's all about. Manage your risk, the type of person you are. If you're a big risk taker, fine. As long as you have a trading plan to support that, that's fine. But if you're swinging from the hip looking to get short the market, and if you don't think the market is at all-time highs and the economy really isn't chugging along the way the market thinks it is, think again. We're up 5%. We could be up another 5%, and we could be at 1575 at the end of the week. So it's not out of the norm, especially when you have algorithms and high-frequency trading going on. The markets will just continue to grind and push everybody to its extreme. But when that time stops, look out below, and that's all I have to say. So be very, very careful. And like I said, if I was swing trading, I would be buying protection, very, very cheap. And that's what I would be doing just so I could sleep better at night. But some people don't like to do that because they think they're wasting money. And again, it's an insurance policy basically on your account. All right. So anyway, what do we have here? I think today's going to probably be a pause day. Usually with a pullback. With the markets that advance. Like yesterday, markets kind of tend to digest what has happened, and then tomorrow I think it's going to be a decent day with initial jobless claims out. We do have Fed Beige Book coming out, so that might be a market mover. Of course, ADP, and then, of course, on Friday we have our non-farm payrolls, which are usually a market mover. It's been a little bit of a depressing numbers movement in the numbers, actually, in the last couple of months. But let's see what happens this month. So let's run right into the charts. I'm only going to show you a couple. I did say yesterday about the dollar. I said the dollar made a big move and looking for a pause and or a pullback, and that's going to probably help equities to push higher. And that's why I still think that equities have one more move here because where the dollar has advanced since the end of January. And I do think the dollar is poised for a little bit of a pullback, at least to the 200. But if the dollar can make a higher low off of here and then start to regain momentum, and then that'll be really a good sign that the market top is in place. And remember, our indicators and our oscillators, they're all secondary to price. Price and volume is what pays us. So that's why I always say, although the indicators are good, it complements what price is doing on the charts. And if we don't see that, all it is just a red flag. And, I would just say use it as a word of caution. And the dollar here is going to be a key barometer of seeing if this market's going to top anytime soon. And I do think it is. It's in the cards. We are in a topping process right now. And I do see that, and along with copper lagging here, this advance, way lagging this advance. And if you can see copper versus the S&P ratio chart here, just dumping. So this is something that's also a red flag to me. Between the dollar and copper and metals, I do think that that's going to be a telltale sign. Now, if the dollar really sells off and continues to sell off and break in support, then I think you're definitely going to have a beeline shot to the 1575 in the S&P cash. Take a look at our NYMO real quick. We did get a spike up, a little bit of a move. We're up at 17 now. Got plenty of room to run to the upside, guys. So there's plenty of room here. And with the Fed pumping liquidity into the markets, I would not be surprised to see 1550 or a challenge of the all-time highs in the coming weeks. Now, markets don't go straight up. They don't go straight down. So just keep that in mind. But again, the market has not given us a 3 to 4% correction since, I can't remember how long, probably back in here early November, at this time in November. But this little pullback here for several days, all it was just a little bit of a pause, pullback, and volatility immediately dried up. We had 2 or 3 days of volatility, and then the markets actually went right back into buy mode, and everybody started buying the market. And when sentiment is at its extreme again, that's another cause for concern for me. But anyway, nonetheless, if the markets continue to chug along, we have to stay with the trend. And what I'm doing is, if I'm not finding any good buy setups, that the markets have gapped up and moved higher, and stocks have advanced, 3-4 candles, that's not my trading plan to be buying stocks. So what I look for is relative weakness to what the market is giving me for that trading day. And you can buy relative weakness, because usually the stock, will not care what the markets are doing because of some sort of PR release, such as like JCPenney yesterday, just beaten down, and people just wanted out of that stock. Didn't really care what the market was doing. So a really good example of relative weakness to what the market's doing. Okay, now let's go right into the charts here. This is the GDX. Now, I mentioned GDX, and still get a lot of calls. What do you think? What do you think? And I think GDX is still in a downtrend. I think that it needs to prove itself via price. As you can see, stochastics just way below. Yes, it's deeply oversold. Yes, it does have a bullish falling wedge formation, but it needs to actually start making higher highs and higher lows before I would look to get involved in this and look to buy for some sort of a tradable bounce. And I think that's what you would have probably to the 40 level. That would be the 20-day moving average. Then some sort of a pullback, and then a break out of this wedge would entice me a little bit longer to hold on to GDX. But right now, GDX in gold in a clear downtrend, and it needs more than just a day. It needs a couple of days of chopping around, some sort of a sideways consolidation, or moving up, making higher highs and higher lows. So right now, GDX is still, to me, on my watch list to buy, but not yet as of this moment. Spiders, SPY, broke out of the consolidation, new highs, lower volume on this advance all the way up. So guys, again, a word of caution. Now, what happened is we did unwind our overbought reading, as you can see here. So now we're coming back up to the overbought reading, and as you can see, we had one down day, and now we took it back up again in the last 5 sessions. So Spiders looking good. Like I said, longer term, the market looks healthy. It's just me. The slow grind up all of January, all of February, the last 3 days of February into March, to me is not. This doesn't look healthy for me as far as not having one little pullback. If the market runs up 4 or 5 days, 2-day pullback, another 3 or 4 days, another 3-day pullback, that's healthy for the market. It's not just a slow grind. As you can see, when the candles get larger and larger up at this top, that is a topping process. You're getting close to a top. As you can see here, we took back probably just a good month, actually all of February in one candle. We took back literally all of February in one candle. That's not quality trading. That's not, if you will, good risk on, risk off. When you have risk off, look out below, and that's all I could say. And that's why taking longs up at these levels is just a little bit too risky for me. All right, Spider 60-minute. We're still here. We're still good in this area. R1 153.30 is going to be our new support. We're going to need to hold that for another push higher. I think we consolidate today. Our momentum indicators back into overbought readings, and as you can see here, without price confirming, we're going to get move higher, and our oscillators will just revert right back up and move higher. So this is not a sell signal and or a buy signal when you have an overbought or an oversold reading in our momentum oscillators. And here's the spiders. And what we look for is here, and you can see what a slow day we had. We had, unless you came in long, a bounce back. We opened up higher, and we like to take out a 15-minute candle of our highs to get confirmation that we're headed higher with new order flow. We did get that on the gap up, but we want to make sure that we confirmed, and sure enough, we only had really about a good hour's worth of trading on the long side, which to me, the market was already extended, so that's why I look for relative weakness. And as you can see here, we did nothing the rest of the day, and that's what usually has been happening. We move up, and we grind sideways. Sideways, move up. Same thing. Take your pick. Either way, markets either just have a 30-minute to an hour, hour and a half move, and the rest of the day sideways with a little bit of activity the last 15 minutes. That's not really good trading, so you need some quality trade setups in order to be green, at least for the day, get paid, and then move on to the next day. Okay, 1530, we broke out. We have new resistance up at 1550. You see how CCI is lagging this move higher. So we'll just see. Right now, 1530 will be our new support area, which was resistance. I'm still looking for a 1495 support area. And our target move right now is still 1475. But big area is going to be 1500 to break. And that's going to coincide nicely as the 50-day moving average on a daily chart starts to move higher. Okay, 60-minute, I've readjusted my Fibonacci to our new high here. And as you can see here, 38% retracement actually coincides nicely now on this pullback. So we'll look for a 38 to a 50% pullback, still in the cards. And take a look at our transportation sector. Now, as you know, out of the 5 sectors that we follow, the transportation sector is the leader. No question about it. Everybody knows it that trades the markets. And you can see it clearly leading the market. There is no question about it. We'll look to see if any weakness come in the coming days and weeks in the transportation sector, making all-time highs, IYT, the ETF. So nothing wrong with this at all. Nothing wrong at all. So the markets in general look pretty healthy here. Again, we just need some sort of a pullback. This little pullback here is really not what we were looking for. We had our bear flag here, and we broke back out of it. So I'm going to remove this as a failed bear flag. Take that out, and as you can see here, now we're back into this rising channel. We'll just see now. We'll just kind of move this up a little bit. There we go. And as you can see here, we can test the highs easily back up into this 93, 94 area in the IWMs. Now, the Russell is lagging. There's no question about it. You can see it on our indicators here. We are lagging to price. So we'll just have to see, take it one step at a time. But when you get to these areas, and you'll see that markets do lag, Russell 2000, which usually is one of the leaders, will start lagging what the general market's doing. Then we'll see if everybody else plays catch up. Diamonds, strong move up, guys. Dow Jones, again, new highs. Everybody's excited about the Dow Jones making new highs. It is a lagger, but it is moving higher accordingly, so looking good as well. XLF did get a bounce up. Did get some good movement to the upside, but again, if you look at it, we are lagging. Our momentum is lagging to what price is doing, so could be a little bit of a warning sign. And again, down the road, I think this is going to be a real good short. Not yet. Obviously, it has not proved it to us that it is a short at the moment, but we're starting to lag price here, so this is interesting developments. Take a look at Apple. Apple held the 520. I'm sorry, excuse me, 420. And now we'll see which way it's going. This is the weekly chart. Again, guys, look at the indicators are really just take it to the woodshed. Needs a lot of work before I look to buy anything. But again, for a day trade, if you wanted to pick up Apple here in the early morning session, I think we had a decent bounce yesterday right off of this lower trend line. So again, still needs a lot of work, but for a day trade, I think that's this stock. That's all that is the day trade. And as you can see here on Qs, we broke out of this consolidation. I added this line here, and we broke out of this as well. So, and I kept saying, technology is looking really good to get accumulated here in the coming weeks. But I'd love to see the market pull back a little bit before we start accumulating certain sectors and stocks and holding them. I just don't see the market, just don't have much legs here. And with retail buying up in this area, it's just going to trap a lot of longs, and it's just really not in my trading plan. But anyway, if you're comfortable with it, hey, lots of luck. I think that's fantastic. But again, next level in the S&P is 1550 for a quick recap. Let's look for probably a pause today and see what happens Thursday and Friday. We do have some risk events coming. Non-farm payrolls coming out on Thursday. And we do have some central bank speaking tomorrow in Europe, so that could be a market mover as well. Guys, be safe out there. Have a great day, and we'll talk to you tomorrow. Take care.